Hi, everybody. Today I'm joined by Terry Ryder, and we're going to tell you all about the Price Predictor Index for autumn 2023. Terry, in layman terms, what is the Price Predictor Index?
Tim, it's a different way of monitoring property markets. Media is obsessed with what's happening with median prices. And that's pretty much all we get in mainstream media as a barometer of what's happening with property markets. We really like monitoring sales activity because we think it's a forward indicator of what will happen with prices. So with the Price Predictor Index, we monitor sales volumes quarter by quarter to see the patterns, whether sales activity is rising, whether it's falling, whether it's consistent, because we think that gives us an indication what will happen in the near future with prices. So we've been doing it for the past 8 years, quarter by quarter, and we've found that it's actually a very accurate forward indicator of what will happen with prices. And as an example of how it can work, we've recently seen prices declining in Sydney. We actually predicted that before prices actually dropped because we could see the drop off in sales activity in Sydney late 2021, early 2022, before we started to see prices actually falling in Sydney.
Okay, so if I'm reading into this correctly, where CoreLogic might be talking about an area dropping because of the median prices, you're saying that if we're looking at volume of sales, that's a lead indicator to show what could be coming next, because if there's a rise in sales volume, that's showing that there's high demand in an area. Would that be accurate?
That's right. But there's always a time lag between the market reacting to a changing circumstances. So you might have a flat market, and then for various reasons, various local reasons, improvements in the local economy, perhaps we'll see sales activity start to lift in that market. There's a time lag before that translates into rising prices. So it works with sales activity rising, leading to rising prices. It also works in the other direction. When sales activity drops off dramatically, we're likely to see price growth stop or prices fall. And we've seen both those scenarios playing out in different parts of Australia over the last 12 months. So we're able to forecast that Perth and Adelaide weren't going to see their prices falling in this latest period of rising interest rates. Most of the economists predicted everywhere was going to see prices falling. We actually forecast that some of these markets would actually resist that trend because their sales activity had continued to be strong.
Yeah, well, that's as good a crystal ball as you're going to find.
Well, it actually is a crystal ball. That's why we think the Price Predictor Index is so valuable, because it actually provides a short-term crystal ball for investors and other types of buyers and sellers to what's likely to happen to prices in individual areas. So we provide a rating based on sales activity trends for every major suburb and town in the country in this report. And that gives people a forward indicator that they can actually use, whether it's as a buyer or a seller, ahead of something happening with prices.
I think that's an interesting point. You said either a buyer or a seller, because whilst Hotspotting does get a lot of investors coming to use our services, this report is equally as important for somebody who might be thinking about selling their home. Should I be, selling it in this market, or is it likely to continue rising? And if it is, maybe I should be holding out.
Well, that's right. And I mean, one of the things that came out of the new autumn edition of the Price Predictor Index is that the Melbourne market is particularly weak at the moment. It's very, very, very few suburbs of rising sales activity in Melbourne. There are a few, but not many. And so people considering, should I sell, should I not in Melbourne? Based on the findings of this report, it might be a good idea to hold off until things improve. I think Melbourne markets will improve as 2023 evolves because of the opening of international borders, the flooding in of migrants and international students. I think the Melbourne market will improve off the back of that. But right now, it's a particularly weak market to be a seller.
So to finish off, CoreLogic came out with some positive news today in the media, which has probably been long waited. Are we seeing a reflection of CoreLogic's same results in the PPI?
Yeah, for the first time in quite a long time, the CoreLogic monthly price report, which is published on the first of each month, purporting to tell us what happened with prices in the previous month. For the first time in 12 months, we've seen an overwhelmingly positive outcome. We've seen most of the market jurisdictions in the country producing price growth for houses and for apartments in the month of March, led by Sydney, which had a pretty remarkable 1.5% monthly rise for houses. And that's a market that's had the biggest drop in prices over the last 12 months. So very encouraging to see that. It was foreshadowed by some of the earlier results. February was the first indication that things were turning a little bit positive with the CoreLogic price data. March confirms it. But also it's a reflection of some of the things that we have seen coming through our analysis in the Price Predictor Index. We could see some improvement in the Sydney market in the past couple of quarters.
Well, there you go. If you're looking to buy or to sell, you need to go and spend a couple $100 to get one of these reports. It is the best insurance policy you could have. Go to our website, hotspotting.com.au, look at reports, and you want the latest Price Predictor Index for autumn 2023. Thank you very much.